Welcome to Mark Arnold's Finance. I have decided, and of course this was a recommendation by a subscriber of mine, so thank you, but I want to do a comparison between the two largest energy companies in the United States. They also have a presence worldwide, and that's Exxon Mobil and Chevron. This is going to be a good video. I did a lot of research on this. So before we get started, if you're new to my channel, be sure to subscribe. I'm somebody that is very transparent. I provide diverse quality content, and I share my portfolio performance with every single video. So let's do that now, and I have an exciting update. I actually made a change to my portfolio. First, let's look at the big picture. I'm only up 1%. I was flirting in the 6+% range for a while there, and now I'm down and I'm only up about $400, $436. But if you look in the financial sector, I sold out of F&B. That was a bank, and I replaced it with Ally Financial. This is one that I have been talking about jumping into, so I finally bought in today. Now, FNB was only a $300 holding of mine, and I made $100 profit on it, so I sold it around $400 total. So it just wasn't a big position. I had no plans on adding to it, so I decided to sell, lock in those profits. I put a little bit over 1,000 into Ally Financial so far. You'll see it's down over 2%, but I will do a more detailed video on this, and I'm going to take those proceeds from selling the other bank and I will deploy it probably later this week or early into next week. It's only $400, but hey, I'm going to be putting it in. So overall, market went down again today. Of course, we had Jerome Powell say we're in for a longer recovery. They're not easing up. And this just sent the markets going down big on Friday and again now on Monday. Of course, by the time I release this video, who knows what happens, but my whole portfolio is down. This reflects what's happening out there in the economy, so it's not something that is differing from what's going on. So I'm okay with that. I'm getting to add to my positions I want to buy new companies. So I'm excited. So let me know if you have any questions on this portfolio performance, and let's dive into this video. So I want to talk about the two largest energy companies in the US, that's Exxon and Chevron. Now these two companies are in the gas and oil industry, and this is an industry that is still very much needed and will be that way for a very long time. I don't think people realize just how much that oil goes into making plastics that we have around our house. Our cars use it. There's a lot. Outside of that, fuel-wise, it takes a lot to provide energy for this country to run, and there is not any other source of energy that can currently take over the power that gas and oil supply and produce for us to run efficiently and effectively. So, this is something that I think a lot of people just don't think about. Of course, gas and oil, that whole industry has a negative view on it. I don't think it deserves fully that negative view, but that's just my personal opinion. Share your opinion with me. But again, we still need oil and gas for a lot of things. I think it's going to be around for a very long time. This whole, transfer to electric, I think is more of a marketing thing in my opinion. It's happening, but I think people are buying into it that it's a better option when in itself it has some negatives, right? For the lithium batteries, you have to mine that stuff in order to make all these components for these cars. That's just utilizing a lot of resources, and to draw from the energy grid to charge your cars, that's still at some point utilizing oil and gas. So if you look into it, it's not really, in my opinion, a alternative that is much better, that is something we need to really latch on to fully. Plus, you have a lot of issues with the electric grids being sustained. We see a lot of power outages in California, and so it's just interesting. We'll see where this goes, but oil and gas is still here to stay. I think it's still much needed and will continue to be that way for a very long time. Now, there is wind and solar, but again, they're nowhere near the capabilities that oil and gas can provide. And I attended a leadership conference where these energy experts came out and said that I think it was either solar or wind. I want to say it was wind. That in order to power the US the way oil and gas does, you'd need to cover 2/3 of the land in the United States with windmills. Now again, that could have been solar, but I'm pretty sure it was windmills. And of course that would be detrimental to our environment, right? We could not cover 2/3 of this land with huge windmills. Also, to make those windmills, to make those solar panels, you're using oil. And for me, those methods are just using more products that will need to be replaced and end up in a landfill someday. So again, not great alternatives. But there is one alternative that has a negative stigma to it that all the experts say would be an environmentally friendly energy source, and that is nuclear energy. Now, I know that this is something that has a lot of negative views. There has been some issues, decades in the past, but from what I was told by the energy experts, the technology and the safety now around nuclear energy is nothing to worry about, and it would be a great source that would be the best choice to help the environment and help us to produce something that can be at the level that oil and gas is. So just things to keep in mind, some knowledge I had that I wanted to share. So this brings me to the oil and gas industry, and that I feel even with us going towards electric, wind, and solar, and maybe someday nuclear, I still think it's going to be highly needed for a long time, but will be slowly, of course, downtrending. And I think these big companies like Exxon and Chevron will adapt. They will change, but I think they have plenty of time. I don't think they're in a hurry because they know the dependency we have on these things. So yes, it'll be a lesser extent in the future that we will need oil and gas, but it's still going to be very important for decades to come. So today I thought it would be fun to compare these two companies, Exxon Mobil and Chevron, the two largest energy companies in the US, and let you guys know which one is the better investment for us investors, right? Which stock has done well up to this point and should do well going forward. So I'm going to reveal all that using my metrics chart that I created that I've been using with a lot of these comparison videos. It's been very fun. I've been getting a lot of good feedback, so I hope you guys enjoy this. So Exxon Mobil, it was founded in 1870, so it's very old, right? That's an old company, and it explores for and produces crude oil and natural gas in the U.S. and internationally. Now, I want to dive a little bit into some of their financials. So let's look at their cash position. If we look at ExxonMobil's cash, we will see that it has gone up drastically. Look at that, from $3.5 billion to over almost $19 billion over 5 quarters. That is massive. And hint, we have had gas prices go crazy over the last years, and this is part of the profits that they are able to bring in, and part of that is in the form of cash. Now, if we look at their debt, their long-term debt, it's actually going down from a little over 45 billion to now 39.5 billion. So a great sign so far. They're getting some good marks from me. What about their net income? Are they controlling their revenue, their sales versus their expenses well? Yes, they are. Look at that. It went from 4.5 billion just about to 17.8 billion. So far, financial-wise, this company's looking great. So let's look at the fundamental analysis. And this is a measurement I like to use that is provided through one of my brokerages. And it says that right now they are considered undervalued. They are of high quality. They are higher on the growth stability metric, and they're strong in their financial health, which we just saw, right? Good cash growth. Their long-term debt is downtrending. Their net income is going up, and all at very healthy amounts. So this is all great to see. Now, Chevron was founded in 1879, so 9 years after Exxon, and they engage in integrated energy, which is crude oil and natural gas, and chemical operations worldwide. So if we look at Chevron's cash position, we will see kind of a similar trend. It went from 7.9 billion up to almost 13 billion. And if we look at their long-term debt, we will also see that it is downtrending. It went from 39.5 billion down to 23 billion. So Again, this company's, just like with Exxon, is doing a great job. So what about their net income? Again, it's going up from 3 billion to 11.6 billion. So they are managing their revenue and sales versus their expenses extremely well. If we look at their fundamental analysis, we will see here that they're considered slightly undervalued. Exxon was considered a little bit more undervalued. Their quality is high. Their growth stability is higher than Exxon's, and their financial health is not as strong, but still in the very healthy range towards that high end. So again, overall, great marks for Chevron. So I want to show you guys a few kind of articles here, or one article in particular says Exxon and Chevron report record profits on high oil and gas prices. The energy industry's windfall followed a spike in prices resulting mostly from Russia's invasion of Ukraine and the global economic rebound from the pandemic. So yes, the whole Russia-Ukraine geopolitical issue created this perfect storm for these giant oil and gas companies to say, hey, Russia's cutting off their supply. We need to raise our prices because now there's a supply issue. And so, as we saw, it created record profits. If we continue on, Exxon reported income of $17.9 billion for the 3 months through June, more than 3 times what it earned in the same quarter a year ago. Revenue at the energy giant jumped to $115.6 billion from $67.7 billion a year ago. That is amazing. Now with Chevron, their performance was similar, with profit more than tripling to $11.6 billion as sales rose to $65 billion compared with $36 billion a year ago. So Exxon is the bigger company, but they're both proving to really be strong with their earnings, with their revenue, and it's really due to these huge jumps in gasoline prices over the last year, which have started a downtrend. We'll talk about that in a minute. This all comes after the oil prices nearly doubled from a year ago. The results were expected, but Exxon and Chevron still beat analyst predictions for profit. So even with the expectation that they were going to kill it, they even went above and beyond the expectations for that. So the results mean that 5 of the biggest Western oil companies, including Britain's BP and Shell, as well as France's Total Energies, are likely to have generated some $60 billion in earnings for the second quarter. That's in one quarter, guys. So again, pretty phenomenal. I want to move on to comparing the sales and their earnings per share versus what's expected in the future. So Exxon Mobil's we'll start with. We'll see this chart here, and we'll look at their earnings per share at the top. It's expected to grow 21% over the next 3 to 5 years. And we see here from 2021 to 2022 a huge jump, and then a little bit of a downtrend in 2023. But within the 3 to 5 year estimate, it's still expected to grow 21%. So times are still bright for earnings per share for ExxonMobil. Now, if we look at their sales are expected to grow 26% in 2022 from 2021, which is a huge jump, and then it's supposed to slow down just slightly in 2023. So, from 2021 to 2022, we see these really positive increases and then a little bit of a slowdown in 2023, but I think that's supposed to pick back up by 2025, 2026, and still provide growth as we saw in those numbers. If we look at Chevron's, we will see here that it's a similar story. So their earnings per share is expected to grow 12% over the next 3 to 5 years. Keep in mind, Exxon's was 21%, and the sales are expected to grow 35% from 2021 to 2022, and Exxon's was 26%. So earnings per share, Exxon is expected to grow more, and for sales, Chevron is expected to provide more in growth. And again, we'll see here huge jumps from 2021 to 2022 with some slight slowdowns in 2023, but growth over the next 3 to 5 years. So it's looking good. Now, with oil prices that went sky high, creating the high prices at the pump, we know that the profits are because of this. This is a huge part of it. And it's creating a lot of political pressure to boost production and lower costs to consumers. We know that President Biden is very outspoken about this, saying, you guys made record profits, you need to pass that on as for savings to consumers. And in Britain, which is home to BP and Shell, they announced a special tax on the extraordinary profits of oil and gas companies. And here in the US, there are certain Congress and Senate individuals that want to propose something similar, so that could hit them as well. So I see two main risks in the short term, and that is the political pressures, right, to kind of reduce their profits and reducing the prices to consumers, and kind of imposing these special taxes for these above the top, earnings and profits and stuff like that. Long term, though, with the whole transfer to electric, that's, I think, decades down the road and nothing that I'm concerned about right now. That's still expected to be very strong. So both companies agreed to expand production somewhat, but they also announced a big increase in share buyback programs that reward shareholders. So this is a third thing, actually, that I think is a short-term issue, because a lot of the politicians see these strong buyback programs as just helping investors, the shareholders, where they want it to help the consumers. So again, there could be some political pressure there as well, not only to reduce gas prices, but to stop these share buybacks and possibly impose taxes. So that's three things that could affect these companies. Now, in April, May, and June, American crude oil averaged $109 a barrel, which is up 64% from the same time last year. And last week, crude closed at about $98 per barrel. So we do see those prices coming back down, but I think they'll remain strong. Gasoline, on average, was at the high point just over $5 per gallon, and now it's about $4.26 per gallon for a national average. So the goal for these companies is to supply the world with the energy that it needs. And, again, I'm not worried that this whole transfer to electric is something that's going to really dent these companies in the short term. I think that will be a decades-long process before these companies, really slow down their production, because now other forms of energy are taking over. But again, they have those 2 to 3 decades, I feel, to adapt and change their business, as needed, and they will do that. I have full confidence in that. So now let's jump to the metrics. That was a lot of information. So let's look at the numbers, and this will help us choose a winner, and then I will choose a winner based on my own kind of outlook. So if we start with this, we will start with the PE ratio. So Exxon Mobil is 10.71 and CVX is a little bit more pricier at 10.9, but they're virtually flat, but it does go to Exxon. Anything in green is the winner. Now the earnings per share for the second quarter of 2022 versus second quarter of 2021, here you're seeing those effects of, the high gas prices. So the growth between those two periods, year versus year, for those quarters, ExxonMobil went up 282.73%, and Chevron went up 271.88%. Massive, right? If we look at their total revenue trailing 12 months, ExxonMobil is the bigger company, and it brought in $352.2 billion in revenue, where Chevron brought in $206.10 billion. So massive amounts of revenue. Now, the revenue over the trailing 12 months for ExxonMobil grew at 64.07%, and for Chevron, it's 77.62%. So Chevron takes it there. These are really excellent numbers. The revenue growth over the last 5 years, which includes a lot of the years that were painful, ExxonMobil grew 6.97%, and Chevron grew 8.54%. So Chevron takes it here. Now, cash flow growth has been good. Over the last 5 years, ExxonMobil grew their cash flow growth 7.08%, and Chevron grew at 12.09%. Sorry, that CVX, I keep wanting to say CVS, but Chevron, I got to get that stuck in my head. Now, the dividend yield, they're virtually the same, not much difference, but ExxonMobil does take it. They have a yield of 3.6%, where Chevron has a yield of 3.48%. The one-year dividend growth, Exxon grew at 1.15, where Chevron grew at 5.97. So they definitely were the winner there. Now, the dividend payout ratio is virtually a tie, but Chevron does edge it out at 38% versus Exxon's 39%. And these are both in healthy ranges, in my opinion. Anything below 50% is good. And then for each 10% below that, it just gets better and better. So to be below 40% is great. Debt to assets. They both have healthy ranges, in my opinion. Exxon is at 49.8, where Chevron is lower at 40.1, so they take it there. The profit margins are, again, pretty close, but Exxon is 25.25% and Chevron is a little higher, which they take the win at 26.75%. Now, shares outstanding. They both announced they're doing some big share buyback programs in the coming years, and over the last 5 quarters, Exxon wins slightly because they were able to reduce their shares every quarter over the last 5 quarters, where Chevron only did it the last quarter. It kind of was like an up and down, but it was up in quarter 1 and and then it started going down in quarter 2. So Exxon was more consistent, so they get the green there. Now, analysts score these companies very bullish, but Chevron more bullish at 9.1 versus Exxon at 8.6. That's out of 10. Now, what I rate these two, I rate Exxon slightly more at an 8, where Chevron is at a 7. The reason why I did this is Exxon is the bigger company, so I feel they have, let me put it this way. When you are the market share leader, you do have some advantages. So I calculated that into kind of my outlook for these two companies. And Exxon did have some better growth with their earnings going forward, as we talked about, which is very important as an investor. So that's why I rated them 1 point higher, but both companies are great, and I don't think you can really choose a wrong path here. But for this metrics chart, the winner is Chevron. They have more green. Exxon had 6 green and Chevron had 8. So they take the win when it comes to this metrics, which is more of a measurement based on prior performance. But now it's my turn to pick a winner based on the future. They are so close in my opinion, so again, you can't go wrong, but I do pick Exxon Mobil for the reasons that I just mentioned. I think they have the market, they're the leader with the market share when it comes between the two, so I think they have advantages there that will help them. And I think they have a brighter path for growing their earnings per share in the future, which was 21% over the next 3 to 5 years versus Chevron's 12%. So I just think they're so close. I had to choose something to break the tie, and that's what I did for going forward. So I think past performance, Chevron definitely wins, but going forward, I think Exxon is probably the better investment, but both are great choices. And again, these energy companies, the oil and gas industry, it's not going anywhere anytime soon. So I think it's still great to have a small portion of it in your portfolio, and these companies will adapt, right? They make all this money. You know that they're preparing for the future, but they realize there's still a strong dominance with oil and gas right now. And so that's why a lot of people like Berkshire Hathaway, Warren Buffett's company, is investing in oil companies still till this day. So with that said, let me know what you would choose, Chevron or Exxon, and why. And if you agree with my analysis and all my opinions and views that I had, those are just my own opinions, and I welcome any opinions yourself that might agree or disagree with me, and that's how we all learn. So thank you guys very much for joining me today. Be sure to subscribe so you don't miss an episode, and we'll see you next time on Mark Arnold's Finance.